Today we will start with the balance sheet, the second part of income statement. Sorry, the second part of final accounts. The first part is income statement while preparing, and the second part is balance sheet when preparing. So, if you look at the reality, part one is balance sheet and part two is income statement. So don't get confused. While working, we work income statement as a first part and balance sheet as a second part. So here goes the format for you for PUC. Okay, so this is a balance sheet. We take here heading as on, balance sheet as on 31st March 2021, like that. So it indicates the value of various assets and liabilities of a joint stock company on that particular date. Remember, every transaction that takes place in the company, it will have a impact on the various value of assets and liabilities. Every transaction will change the value of assets and liabilities. So it is not for the year ended, it is as on last day of the year, accounting year, that is on 31st March, whichever year, that year last day after the working hours, whatever they entered on that day, value of assets and liabilities. Next day morning, 1st April, some transaction happen, even one transaction happen, there will be a variation in assets and liabilities. So heading will go as balance sheet as on, income statement will go as for the year ended, because we are finding a net profit there for one full year, but here it is as on that day, that is 31st March of any given year, last day will be the value. So here 3 columns will be there usually: particulars, note number, and the amount, which you cannot see in this. While working the problem, you will be able to see. The first part, you can see here the heading as equity and liabilities. The second part is called as assets. So first, let me get into the equity and liabilities. I'll explain the various headings. So the items which comes under the balance sheet has to be first divided into whether it belongs to equity and liabilities or assets. Then that item comes under which item under assets, which item under liabilities. Based on that, we have to write and find the totals and write in the balance sheet. So when I work the problem, you'll be able to understand. So let us go through here some of the headings, what you see here in the balance sheet. I'll be explaining. Any doubts is there, definitely you can ask me. Okay. First one, equity and liabilities. You can see here 3 headings: 1, 2, and 3. This is the one we have to remember first. We have 1 as shareholders funds, 2 as non-current liabilities, 3 as current liabilities. So first you have to remember, on the liabilities side, there are 3 main headings. That is the first thing. Then under shareholders fund, you have A and B, that is 2 parts. One is called share capital, other one is called reserves and surplus. Next, under heading 2, you have non-current liabilities. It has only one particular heading, A, long-term borrowings. Then 3 is called as current liabilities. This has 4 parts. So you have to remember all the headings carefully. In the exam, you're supposed to write this format. Then we have to work the problem. So headings you cannot change according to your discretion. You have to write in the same order which is prescribed for second PUC. So first one, short-term borrowing. Second one, trade payable. The C part is other current liabilities. The D is short-term provisions. I'll explain all the headings. Don't worry, just keep listening. If you have a doubt, you can ask. The second part in the balance sheet is called as assets. In assets, we have again 1 and 2 part. Part 1 is non-current assets. Part 2 is current assets. So under part 1, you have again A, B, C. It is given as BB. It is not B. It is C, last one. So under A, fixed assets. Under that, tangible assets and intangible assets. Then under B, non-current investments. C is other non-current assets. Then under part 2, heading is called current assets. Then you have 6 subheadings there, A to F. A, current investment. B, inventories, that is nothing but stock of goods. C is trade receivables, that is debtors. D is cash and cash equivalents. E is short-term loans and advances. F is other current assets. So this is the format of a balance sheet. Whenever you are working a balance sheet problem, this much has to be written. This is the format. You can't eliminate anything out of it. We have to have this, then work the problem. So let me explain one by one from the beginning. That is, first one is under liabilities. Number 1 is shareholders funds. So first we have to understand who is a shareholder. So shareholder is a person who has invested in the share capital of the company. That is, who has put the capital into the business of the company. So the money that belongs to the owners is called as shareholders funds. The money that belongs to the owners of the company is called shareholders funds. So there are 2 parts in it. One is share capital, other one is reserve and surplus, reserves and surplus. I'll go one by one. Yeah. So under share capital, what are all the items usually comes? The list is here. I'll share with you later. Under share capital, you're going to find the categories of different shares. That is, first one, authorized capital. So what is authorized capital? You have to know. It may come for your 1 mark question or 2 marks question. So before that, let me just brief you. Share capital is of 2 types for the company. One is equity share capital. The second one is preference share capital. Every company need to collect money from public towards the capital. That capital is called equity capital. That is the capital which is important for formation of a company. Without equity shares, the company cannot exist. So you might have learned in first PUC business studies in the chapter called joint stock company. So you have to remember the concepts from the business studies topics connected to joint stock company. So other one is called preference capital. So people who have invested in equity capital are the owners of the company. People who invested in preference shares have some preference have some preference compared to equity shareholders, only compared to equity shareholders. So that is with regard to repayment of capital when the company is closed. First, preference shareholders will get the money. Still money available, the money will go to equity shareholders as the last people to receive the money in case of company is closed. When the company earns profit, we have done in the income statement, profit after tax. So that money will be used for various purposes. One of the purpose is distribution of that profit. So first part of the profit will go to preference shareholders. Next part will go to equity shareholders. So that is how the preference is given. So you can go through all those things in the business studies. I'll just go through here type of capital. Now, authorized capital is the maximum capital the company can raise, company can collect from the public in its lifetime. So company is formed usually for a long period to do many activities, to run the business for 80 years, 100 years like that. So they would like to do 100 or 200 different activities. So they will estimate in general what will be the money required in next 20 years, 30 years, 50 years. They will decide this should be the authorized capital. It is also called as registered capital. So that is authorized capital. So how many shares, what is the amount, and what is the face value of the share? Each share will have different value, 1 rupee, 10 rupee, 50 rupees, 100 rupees. When we do problems on issue of shares, I'll explain there in full, in complete, I will explain there. Next is issued capital. The company will go for starting the business. So they collect some money. To collect the money, they will decide this is the money required from public. So they will offer to the public. So for example, authorized capital is 100 crores. They may require 10 crores now. So they go for issue of 10 crore capital, and public may buy, public may subscribe all 10 crores or less than 10 crores. So if the public will buy all the shares, subscribe all the shares, so it will be 10 crores subscribe capital, and money is received in full means that is going to be called up capital and paid up capital. So money not received will be called as calls in arrears, or we call it as calls unpaid. Next, for feature of shares, again when we do problems on issue of shares, I'll explain that. Just brief here. When the shares are issued, people don't pay money in full. They might have paid part of it. Their rights are cancelled. Suppose somebody has to pay 10 rupees per share. He has paid only 5 rupees. So even after repeated request, the person has not paid. So the share allotted to that person will get cancelled. 5 rupees is retained by the company. That is for feature of share. Then, so how much is the remaining uncalled is, that is uncalled capital or unissued capital. We'll come to that later. Next, reserves and surplus. When the profit comes after tax, the company cannot give away all the profits to the shareholders. They have to keep some money for the company's growth, company's expansion, any problem that arises in the company. Like you and me save money out of income, we keep some money in the bank, we invest in some other assets. Similarly, the companies has to keep some money aside. That money is called as reserves, or we call it as funds. So there are different type of funds created by the company for various purposes. So I have given here some reserves, not all reserves and all funds, only few. Capital reserve for long-term purposes, special purposes. Capital redemption reserve is to repay the preference capital. Then securities premium reserve, when the company wants to repay the money to the preference shareholders, they want to pay more money, that will be decided. Then debenture redemption fund to repay the debentures, like that, different purposes. So if there is no purpose, it is called as reserve fund or it is called as general reserve. So if they want to replace the assets, it is called sinking fund. So if they want to revalue the assets and liabilities, find the profits or loss, like in a partnership, that is called revaluation reserve. Special situations like that, there are different funds like employee compensation fund, employee accident fund, dividend equalization fund, statutory reserve. There are many reserves possible, only few as I told listed here. So from the profit, some money kept aside is called as reserves. Then surplus. Surplus, what we see in statement of profit or loss, credit. Credit means we have done the problems on income statement where you have seen the profit after tax, you had amount that is in plus amount, that is called credit. That is, income is more, net profit after tax. If there is a minus value, it is called net loss after tax. So that is going to be called as debit. So that is a loss and profit is called credit. So whether it's a profit or loss taken under here, but as per the rules, we have to take only the surplus. So we cannot take loss over here. We have to take only the surplus. Surplus means net profit after tax. Then the third part is called long-term borrowings. So long-term borrowings is going to come under the heading called non-current liabilities. Non-current liabilities. You can see here, long-term borrowings comes under the other heading called non-current liability. What is non-current? What is long-term? One and the same. The money payable by the company, where the company has a time more than 1 year to repay the money to a bank, to some other company, to the government, to anyone. The company has a time more than 1 year is called long-term borrowings, or it is called non-current liability. So there are few situations where company collect money because company needs huge money. Company have different sources to collect money and use the money. One such source is loans. So another name for borrowings is called loans. So you have here the debentures or bonds, that is money collected from issue of debentures or bonds, that is loan taken by the company from public on which they have to pay interest. So on most of the borrowings, company has to pay interest. Then term loans from banks more than 1 year, because you can see there after 12 months. Then any loan from others, maybe other companies, non-financial banking institutions, so government institutions, so like that. Then deposits, long-term deposits, like banks receive fixed deposit from the public, even companies can receive fixed deposit from public, that is you and me. Public means general people. So that is called long-term deposits. So on whichever amount they have to pay interest, they're all called as long-term borrowings, which has time of more than 12 months to pay. Then other long-term liabilities, you have their heading, but you don't have here in this. Please remember, You have only one long-term borrowing, but heading is here other long-term borrowings, just for your understanding. That is money payable to creditors, bills payable. If you have a time more than 1 year, that is called long-term, other long-term liabilities. Then long-term provisions. Provisions also created out of profits like reserves and funds. So some money kept aside for employees' benefit, like pay pension for them in the future, provident fund for them in future. So like that, different provisions are created. So long-term borrowings is done. Now I'll get into the current liabilities. So current liabilities means amounts payable by company, but the time available for them to pay is less than 1 year. That may be 1 day, that may be 1 week, that may be few hours, few months, but not more than 1 year. The company do not have time to repay more than 1 year. All the payments to be made is called current liabilities. So under current liabilities, you have different types. Remember, company has to pay for various purposes. So those purposes I am giving here, please go through. Short-term borrowings. Again, loans from banks, loans from other companies, loans from any other non-financial banks, etc. But the time is less than 1 year. That is given in the bracket there, repayable on demand. When the bank asks the money, we have to repay. So like that, short-term loans, another type of loan usually taken by the companies on their current accounts are called bank overdraft. So bank overdraft is money taken by the company in a way overdrawn on the current accounts. Whatever money is there, more than that they withdraw. That is called bank overdraft. It is a temporary loan. Again, short-term borrowing. Then again, public deposit. Companies may not accept usually, but sometimes in a urgent situation, they may collect money for 6 months, 8 months like that. That is going to be called public deposits less than 12 months. Less than 12 months. So that is short-term borrowings. That is under current liability, A, short-term borrowings. Next, I'll go for trade payable. What is trade payable? First, we have to understand the meaning of trade and the payable. So trade is nothing but buying and selling of goods. So here, when the business buy the goods on credit basis and they are not paid the money, you call it as creditors, you call it as bills payable. So trade payables have two types. One is creditors, one is bills payable. So that is on goods purchased on credit or service taken on credit, both are trade payables. The next one is other current liabilities. So other current liabilities, you can see here, there are many. So like interest payable on loan, borrowings, debentures from anyone, any loan, interest payable. Then income received in advance, advance received from customers. Then advance received from customer is to do the work, money is received, but the work is not complete. Maybe goods to be sold, maybe some service to be done, like that. So even income received in advance also same thing, like rent received in advance, like that. So before the time is got over, the money is received, interest received in advance, like that. Next, unclaimed dividend. Unclaimed dividend means company has to pay the dividend, that is a profit division among the shareholders, but some shareholders are not collected the money. So the shareholders are not collected the money, it is called unclaimed dividend. or we can call it as unpaid dividend. Dividend not paid because they could not trace out the shareholder, or shareholder is not interested to collect the money. Nowadays it is less because company pay to bank accounts right away. So they will know the bank accounts of the shareholders. Money is straight away deposited into their accounts. Dividend is deposited into their accounts. Next, calls in advance. That is when the money is received on the share capital before asking the money, company may receive the money from the shareholder. That is calls in advance. Then outstanding expenses, any expense, rent payable or interest payable, anything of that sort. So salary payable, any expenses payable, that is called outstanding expenses. Then short-term provision, the provision created for temporary to be paid, to be utilized within 1 year. That is called provision for taxation. So there's a last part of it, short-term provisions. Remember, short-term provisions. So that is provision for taxation, proposed dividend. Proposed dividend means dividend not paid. Company declares the dividend. See, we have got so much profit. We will pay the dividend for you within few days, few weeks. That is proposed dividend. So they keep some money aside. This is the amount of dividend we have to pay. Next, corporate dividend tax is the tax payable. Now it is abolished from this year. This is not there. Previously it was there. So whatever the dividend paid by the company, on that the company has to pay tax to the government. If the company gives 5 crores as dividend, on 5 crores they have to pay tax to the government at a particular rate. So 18%, 18.75%, like that. Different rates was there in different years. So any other provision created for employees for their benefit, maybe for education, maybe for health, maybe for transport, for any purpose, housing. So that benefits to be given for various purposes. So any provision for employees also comes under short-term provisions. So I have explained all the 3 headings and the subdivisions. Now, if you have any doubt, definitely you can ask me.
No, sir, understood.